Warren Buffett's stock portfolio for 2024. Are you curious about the investment strategies of one of the greatest investors of all time? Let's dive into Warren Buffett's stock portfolio for 2024, exploring how, at 93, he's still leading Berkshire Hathaway to success. Welcome to Ace Wealth, where we unravel the secrets of successful investing. Today, we're focusing on Warren Buffett's 2024 portfolio. With over $1 trillion in assets under management, Buffett's choices offer valuable lessons for investors at every level. As we venture into 2024, it's a perfect time to delve into the investment world of the legendary Warren Buffett. At 93, Buffett's investment decisions remain as relevant as ever. Overseeing Berkshire Hathaway, a behemoth with over $1 trillion in assets and $300 billion in stocks, Buffett continues to astound with his enduring role as CEO. His portfolio, a rich tapestry of around 50 public stocks, offers a unique glimpse into his investment philosophy. In this video, we'll concentrate on the top 5 holdings, which cumulatively make up over 80% of the portfolio, providing a comprehensive overview of his investment strategy. Delving into Buffett's selections, it's clear that longevity and stability take precedence in his investments. Many of these stocks have been part of his portfolio for decades, reflecting a preference for well-established companies over high-risk growth stocks. This approach emphasizes wealth preservation and steady dividends, a strategy befitting the portfolio's massive scale. However, it's not just about the big names. Even the less prominent stocks in Buffett's portfolio, like VeriSign, DaVita, and Moody's, play a significant role in shaping his investment landscape. Each stock is a piece of a larger puzzle, revealing the intricate and thoughtful approach Buffett employs in building and maintaining his portfolio. Buffett's portfolio, with around 50 public stocks, is a masterclass in strategic investment. We'll focus on the 5 largest, which shape the bulk of his portfolio. These stocks, ranging from tech to healthcare, reveal not just investment choices, but a philosophy honed over decades. VeriSign, VRSN. VeriSign, VRSN, stands as a dominant player in the domain registry market, a position it has solidified through exclusive agreements and consistent performance. As outlined by Forbes, VeriSign's primary business involves managing the registry for top-level domains like .com and .net. These exclusive agreements, particularly with the Internet Corporation for Assigned Names and Numbers, ICANN, grant VeriSign a near monopoly in this segment. This exclusivity not only ensures steady revenue from domain registrations and renewals, but also positions the company as an indispensable part of the Internet's infrastructure. The growth of the Internet has directly influenced VeriSign's business trajectory. Every new website and digital venture often requires domain registration, directly benefiting VeriSign. The company's model, which involves annual fees for domain registrations, ensures a recurring revenue stream. This model has proven to be resilient and profitable, as seen in their uninterrupted service for over 25 years. As more businesses and individuals continue to establish online presences, VeriSign is well-positioned to capitalize on this ongoing digital expansion. Analyzing VeriSign's stock valuation, as per Yahoo Finance, reveals a company that has experienced significant growth over the past decade. Although the stock has seen fluctuations, a recent dip post-pandemic has brought it below the midpoint of its 52-week range. This adjustment in valuation could present an attractive entry point for investors. VeriSign's ability to grow sales and profits consistently at a mid to high single-digit percentage most years further solidifies its investment appeal. Its robust and steady financial performance in a sector that is essential to the digital economy makes VeriSign an attractive stock for those looking for stability in the tech sector. DaVita Inc. DVA. DaVita Inc. DVA is renowned for its specialization in kidney care, notably in providing dialysis services. This focus has positioned DaVita as a key player in a crucial segment of the healthcare sector. According to MarketWatch, DaVita operates a vast network of dialysis centers, serving a significant number of patients across various countries. This extensive reach is not just a testament to the company's operational efficiency, it also reflects the growing demand for kidney care globally. DaVita's specialization allows it to cater to a specific, essential medical need, which is critical given the rising prevalence of kidney-related health issues. Warren Buffett's interest in DaVita underscores his investment philosophy of prioritizing stability and long-term demand. The aging population, as highlighted in the Yahoo Finance overview of DVA, is a key factor driving the need for kidney care services. This demographic trend suggests a continuous and growing demand for DaVita's services, making it a stable investment. Buffett's preference for investing in companies with a solid base in essential services aligns perfectly with DaVita's business model, as it provides critical healthcare services that remain in demand regardless of economic fluctuations. Examining DaVita's financial performance reveals a company with consistent and stable operations. While DaVita may not exhibit explosive growth typical of some other healthcare segments, its steady performance is a hallmark of its resilience and strategic focus. The company has managed to maintain a relatively stable financial position, which is crucial in the ever-evolving healthcare industry. This stability, combined with the increasing necessity for kidney care, positions DaVita as a reliable choice for investors seeking steady long-term returns in the healthcare sector. If you're enjoying this and want more tips, here's a small ask. Click subscribe, give us a like, and turn on notifications. This way, you won't miss out on any of our helpful videos. We've just covered some fascinating insights into Warren Buffett's portfolio. What's your take on these investments? Share in the comments which of these stocks you find most appealing or surprising. Moody's Corporation, MCO. Moody's Corporation, MCO, is widely recognized as one of the top credit rating agencies globally, playing a pivotal role in the financial services industry. As detailed on Yahoo Finance, Moody's is not just limited to credit ratings. It offers a wide array of financial services, including risk assessment, analytical tools, and research for global financial markets. This diversification allows Moody's to provide comprehensive solutions to governments and corporations, aiding them in making informed financial decisions. Moody's influence in global debt and finance is substantial, given its role in evaluating and rating the creditworthiness of various entities, which can significantly impact investment decisions and the broader financial markets. Moody's extensive work in rating over $72 trillion of debt and processing financial statements of millions of companies positions it as a critical player in the global financial ecosystem. This influence, as highlighted by NASDAQ's analyst research on MCO, underscores its importance in the stability and functioning of international finance. Moody's ability to navigate market downturns is partly due to its critical role in the financial industry and its diversified portfolio of services. The company's resilience during economic fluctuations is a testament to its robust business model and strategic positioning, making it a reliable player even in challenging economic conditions. Evaluating Moody's current market valuation presents an interesting scenario. While the company has shown remarkable growth in recent years, its stock price has risen significantly, leading to a valuation that appears relatively high compared to the broader sector. As per Yahoo Finance, Moody's has experienced substantial growth, which is reflected in its stock price. However, investors need to consider the potential risks associated with such a high valuation in relation to the company's growth prospects and the overall economic environment. While Moody's remains a key institution in the financial world, its current market valuation necessitates a cautious approach from investors, especially considering the potential volatility in global financial markets. Kraft Heinz, KHC. Kraft Heinz, KHC, is a prominent player in the food industry, known for its diverse array of popular brands such as Kraft Cheese, Heinz Ketchup, Oscar Mayer Meats, and more. As detailed on Forbes, the company's extensive brand portfolio has historically positioned it strongly in the market. However, Kraft Heinz faces significant challenges in a rapidly changing industry. Consumers are increasingly health-conscious, and there's a growing preference for fresh, organic, and less processed foods. This shift in consumer behavior poses a challenge to Kraft Heinz, as many of its products are seen as traditional or processed, which may not align with current health trends. The rise in health consciousness among consumers and the growing competition from both established and emerging health-focused brands are key factors affecting Kraft Heinz's growth. As reported by Yahoo Finance, these trends have led to increased competition in the market, with many consumers opting for healthier alternatives or cheaper store brands. This shift has put pressure on Kraft Heinz to innovate and adapt its product offerings to align with these new consumer preferences, a task that is challenging given the company's large portfolio of traditional brands. Analyzing Kraft Heinz's financial performance and future prospects reveals a mixed picture. On one hand, the company's established brands and global reach give it a solid foundation in the food industry. However, as Forbes notes, the company has struggled with growth and innovation in recent years. The expected decline in revenue and the challenges of adapting to changing consumer tastes indicate that Kraft Heinz needs to strategically rethink its product offerings and marketing strategies. The company's future success will likely depend on its ability to align with the health-conscious trend and offer products that cater to the evolving preferences of today's consumers. Which of Buffett's top 10 stocks intrigues you the most? Share your pick in the comments, and let's discuss what makes these companies stand out in Warren Buffett's portfolio. Chevron, CVX. Chevron, CVX, represents a blend of traditional energy practices and forward-thinking strategies. As highlighted on Yahoo Finance, Chevron is well known for its significant role in the oil and gas sector. However, in recent years, the company has been making strategic forays into renewable energy. This transition is evident in their investments in hydrogen storage projects and bioenergy. By diversifying into renewables, Chevron is positioning itself to remain relevant in an energy market that is increasingly leaning towards sustainable and environmentally friendly sources. According to MarketWatch, Chevron has acquired a majority stake in the AES project, the world's largest hydrogen storage plant. This project, along with investments in bioenergy, such as the Renewable Energy Group acquisition, demonstrates Chevron's effort to balance its portfolio with renewable energy initiatives. These projects are not only pivotal in Chevron's transformation, but also place the company at the forefront of a potential multi-trillion-dollar market by 2050 as the global energy sector evolves. Assessing Chevron's current stock valuation, as seen on Yahoo Finance, reveals a complex picture. The post-pandemic surge in oil prices significantly boosted the company's revenues, reflecting its strong position in the traditional energy market. However, the stock's valuation has also been affected by this surge, leading to a need for market correction. While Chevron's stock currently trades at a premium relative to the sector, its continued investment in renewable energy and its robust performance in traditional sectors make it an attractive prospect for investors looking for a blend of stability and forward thinking in the energy market. In this deep dive into Warren Buffett's 2024 portfolio, we've explored his top 5 stocks, from VeriSign's domain dominance to Chevron's energy evolution. Each selection reflects Buffett's knack for balancing risk with reliability, showcasing his legendary investment acumen. These stocks not only represent financial assets, but also embody Buffett's enduring principles in the dynamic world of investing. Remember, while following the strategies of successful investors like Buffett can be enlightening, it's crucial to align your investments with your personal financial goals and risk tolerance. Always do your research or consult with a financial advisor. For more insights and analyses of top investors' strategies, keep watching our channel. Your financial literacy is the key to smarter investing decisions. Analyzing Warren Buffett's top stock picks reveals a blend of stability, innovation, and foresight. His choices underscore a balanced approach to investment, blending traditional market wisdom with an eye for future trends. Reflect on these insights and consider how they might influence your own investment strategies. Thanks for joining us in exploring Warren Buffett's 2024 portfolio. For more insights into smart investing and financial strategies, make sure to subscribe to Ace Wealth. Hit the like button, share your thoughts, and stay tuned for more content that helps you navigate the world of finance.